Welcome back to Primary Source China Investment. This is show Q. Peng.guo and I are happy to be back and looking forward to getting into two important topics today. The first is a little bit of the China legal dilemmas, and the second is foreign exchange and the renminbi. So let's get into the first, which is the law. Now, neither of us are lawyers, but it's important to realize what's going on. So for years, foreign politicians and consultants have told China or have begged China, please follow the letter of the law. And China's finally listened, and they've passed new laws which may have some chilling results. So let's get into exactly what we're talking about. On June 10th, China passed the anti-foreign sanctions law. And this law is largely targeted at countries that sanction China. But it also gives State Council broad powers to go after individuals that are affiliated with those sanctions. And what does that mean practically? Well, it means they can restrict your travel. It means they could freeze your assets. It means they can stop you from doing business. And finally, it means they can implement any other measure that they deem necessary. So, of course, the foreign press went absolutely nuts when this was passed. But the reality is, there's a lot of things on the ground that could get you in trouble. And the practical effect is that foreign firms will absolutely modify their behavior, which is the exact reason why these things are passed in the first place. And here's where foreign firms are reticent to operate like locals, because the gray areas in China do exist. So people expect other individuals and companies to follow the letter of the law and the spirit of the law. But in China, it's not. It's a little bit more nuanced because there's a lot of gray area. There's not a lot of case law. So when laws are passed like this, they tend to be vague. And they tend to be vague because State Council wants the power to limit behavior. And that's exactly what they're going to do, which brings us back to the difference between foreign firms and local firms. Local firms are more comfortable in the gray areas of the law. If you're a large foreign organization and you behave in a gray area with some questionable behavior, that's a very big risk. You could get booted out of China, you could get sanctioned, your shareholders might object to such behavior. So it's a much bigger risk. What this means is a huge home field advantage for local firms in China.
Before we talk about this topic, I just want to give some of the background why the China have such kind of a law. It's really during the past couple of years, China get all kinds of the sanctions from the different countries for different reasons. So I think pretty much China realized they have no way to protect themselves. It's really like the respond to the international sanctions. The trigger is really from during the trade war. That's Huawei's partners hold the Huawei's materials not returned to them because of the U.S. Law. So that is really surprised entire China. So it looks like China domestic companies in China execute the U.S. law to hold the another China company's products. Another thing is, I think that's definitely increased the risk and the operation for the companies run business in both countries, because you don't know there's two laws obviously have the conflict area, which one you should follow. I think that is a big challenge for them. People always get smart. They have the different strategy. They might localize the companies in the local country, and then they find a different way to comply the both law rather than cause the conflict.
Yeah, even the CEO of Nike this week mentioned, he said, look, we've been in China for 40 years. In China, we're a Chinese company for Chinese consumers, and also Tesla and also Starbucks similarly didn't say those kind of things, but you see their results on the ground. They have not been devastated. They did not go away. Those are companies that are going to continue to do business.
Another very important thing is, I think China, first thing, China's progress is not equal to the threat. And secondly, China's progress is significant exaggerate. For example, let's give me the two examples, like the cell phone and the car. industry. So the leading company is Huawei P30 cell phone. It included 1,631 parts. So only 80 parts came from China. So all other parts are from different countries, which just take the 4.5% of this phone. So when Huawei sell these phones, it's really like the international cooperation. Another big, very good example is in the car. So in the car, the engine, the most companies, international companies, they have their own engines. But in China, most of the engines, if they cannot do it, it came from the Japan. Same thing for the diesel engines is also from the Isuzu. For the heavy diesel engines is really all from the United States, Cummins. So those companies may or may not run business in China, but through the supply chain, they really work very, very closely to support the China customers.
Yeah, it's going to get more and more complicated, particularly when there's multiple sets of laws that companies have to contend with, and not just foreign firms doing business in China. These are going to be Chinese firms, like you mentioned. If Huawei wants to sell products in Germany, they're going to have to comply with German laws as well. So each of these companies are going to have to, make their compliance department more robust going forward.
Exactly. Yeah, I think really right now the international society lack the common law and common execution system to work together. Right now they just simply fight together, but not solve the problem. They just fight.
Yeah, I think fighting is part of the solution, though, because we have to get out what the problem is. If we don't talk about it, that's even a bigger problem.
Exactly. Yeah. Hopefully they can find solutions to solve or at least relieve such kind of problem.
Yeah, I think the escalation of these laws is just going to penalize the entrepreneurship. It's going to penalize trade, and that's what you always say is try to make the pie bigger. And when you implement these kind of tariff on one side, law on the other side, these kind of things just impede trade. They don't expand trade.
That's right.
So today on Capital Markets, we wanted to talk a little bit about the two-way volatility of renminbi vis-a-vis US dollar. So renminbi had appreciating for a few months and pretty steady. And then about a week ago, it suddenly reversed. So is anything happening with the renminbi vis-a-vis US dollar? So no currency is an island. As the dollar index was increasing, the renminbi versus the dollar was decreasing, obviously. But policymakers in China were also busy pulling the policy levers that they have, such as the reserve requirement. PBOC increased reserve requirement for banks from 5 to 7%. So that's soaked up about 13 billion of foreign exchange liquidity, and that alleviates appreciation pressure. Similarly, SAFE increased the QD quota. We probably covered that in a previous show, of about 10 billion. So that's renminbi going out of the country. And finally, China's FX reserve rose to 3.22 trillion, which is the highest level since 2016. And also, banks are sitting on a ton of US dollar, more than 1 trillion US dollar. Quixotically, it's cheaper to borrow US dollar in China than it is to borrow US dollar in the US. So there are a lot of things moving around, but if we put it in the context of trade, on a macro level, these moves in renminbi are very small and have very little to do with the trade deficit that runs between China and the US, which is about $40 to $70 billion a month. But it does help on the manufacturing side. So for example, China just printed a producer price index of 9%. So these small changes in renminbi really may mean the difference between profit and loss for manufacturers on the ground in China.
Renminbi currency rate is a very important topic in China. So, and because China is a manufacturing company and it's a manufacturing country, so they have a lot of companies' profit or loss is tied to currency exchange. I think recently is a really big change in the central bank. So initially, central bank is trying to maintain the RMB currency rate in the certain range. But right now, they really give up this objective. So that's really like the renminbi float in the market. So probably like the recent the U.S. infrastructure plan is much smaller than expected, maybe because the U.S. dollar get a bounce back, and also because the renminbi and the U.S. currency exchange get a bounce back. But it looks like it's still in the downtrend from our perspective. Right now, it's reasonable to bounce back a little bit. So we just pay attention to how high it could be. It's just continue, will drop or just bounce back and get some volatility or stable in a certain period. I think right now, the most big news in the macro market it's already pop up, at least in the investors' expectations. I don't think there are very big news beyond the investors' expectation, and after that, the exchange rate should be stable for a while.
Yeah, I mean, even if you're looking at exchange rate volatility of 2 to 3% annually, but that does have a huge effect on the manufacturers there who are operating at razor thin margins, particularly in the big export classes, particularly in big export classes like clothing, electronics. Those kind of things have very small margins. So 2 to 3% is very painful.
That's exactly right.
Yeah. So I don't think from an investment perspective, we're seeing big volatility, 2 to 3%, particularly in a fixed income market where you're getting, 4 and 5% annually. That kind of fluctuation is to be expected. It's not a highly volatile currency like a lot of the emerging markets.
Yeah, that's true. I think right now is China is really still focused on the internal construction. Yep. They focus on improve the technology and improve the renewable energy. Well, that's all the things. It could be like the new engine for the economy. So in the long run, it could bring in a lot of the different growth point in the economy. So overall, I don't see the RMB currency exchange rate could be significantly improved or dropped.
Yeah. So you think for the foreseeable future, we still have stability with maybe a 2 to 3% annual volatility? Is that?
Yeah, that's most of the volatility really came from the market.
Yeah. Okay. Well, we're going to leave it at that this week. Hope you like the content. Please leave us a note, hit the subscribe button. Let us know if we're missing out on any topics that you'd like to hear about. Until then, we'll see you next week. Thank you.
Thank you.